Hey, rock stars! It's me. Yep, you know who it is. It's Jason Boom, your branch manager, VP, Vice President of Mortgage Lending here at Guaranteed Rate here on Team Boom Hawaii. Anyway, today's lesson is to talk about the types of loan products that are available to you as a consumer or as a buyer when you're trying to buy a home. Right? Pretty simple. You have your standard conventional loans. You've got government loans, and I'm gonna break them down in a little bit more detail because we don't want to go too short because it might confuse you a little bit. So let's talk about some of the standard conventional loans, right? So let's say you've never served in the United States military. So that disqualifies the VA loan, right? However, you have a conventional loan product. And a lot of people, they get concerned about, well, when buying a home, my mom and dad told me you had to save a lot of money. It took them, 10 years to save up because we had to put 20% down. Yes, that's the old school method, and it's still a method. There are some people that can actually save 20% and put it down on their home and buy their home. However, in today's day and age, there's programs to where you can literally get in with only 3% down. There's even programs on the conventional government side called the USDA loan where it's 0% down, actual 100% financing, right? It's all going to be dependent upon what your credit criterion looks like, what your ability to repay looks like, and your debt to income looks like. Basically, how much debt do you have counting the new mortgage based off of the amount of income you have coming in, right? So basically ins versus outs, right? So the conventional loan, a very standard product, credit restrictions, normally you want to see at least a 620 credit score or higher. That's not going to give you the best leverage when it comes to choosing your rate. Obviously, the higher the credit score, the better. And each lender is going to be different, right? I like to see scores when we're doing conventional loans of at least 680 or above because that's going to give you good leverage to at least get a very, very good rate. And we can work with that and move from there, right? Let's talk about my government loans, right? Government loans, that's VA, Veterans Administration, FHA, right? Federal Housing Authority, and USDA, which is U.S. Department of Agriculture, right? Basically, USDA is another 100% financing option available to people, basically anybody, whether you're a veteran or not, in your rural areas, not your suburban areas, but your rural, out like in the country, right? So VA, bottom line, if you're like myself and you serve in the United States military, active duty for at least 90 days or more during wartime, or at least 2 years during peacetime, then you are eligible for your VA home loan benefit. If you're Army Reserve, or excuse me, if you're military reserve or National Guard, as long as you've served 180 days during wartime or at least 6 years during peacetime, you are eligible, right? Of course, you're eligible. Doesn't necessarily mean you're qualified, but you're at least eligible. And then, of course, we'd have to go through the deal there. VA loan is 100% financing for our veterans. It's awesome. Tremendous amount of leverage, especially in your high county markets like Hawaii. We have a VA county loan limit of $721,050. Yeah, that's a lot. $721,050. To put it in perspective, I own 2 single-family homes and a condo. I own one in Alabama. I paid $169,900 for it. 3-bedroom, 2-bath, 2,000 square foot home on 3/4 of an acre, right? Got a creek going through it, got a hot tub, all that beautiful stuff. Got an in-law suite in the backyard as well, a 2-story in-law suite where when the in-laws come, they can stay there. $169,900. I have a home here in Hawaii that is a 4-bedroom, 3-bath, 2,000 square foot home on only a 5,000 square foot lot. And when I bought it in 2012, I paid $562 for it. Huge difference, right? So it really just depends on where you're buying a home, how much land is available, how much inventory is actually available versus the amount of buyers out there, right? We have way too many buyers here, not enough inventory. But again, to leverage the VA, to be able to buy my home here in Hawaii, use my VA, I didn't have to put any money down like I would traditionally on a conventional product. If you could imagine 3% down on a 500, let's just round up to 600K, right? So 10% of 600,000 is 60K. So 5% is 30K. So yeah, could you imagine putting, a little over $20,000? Most people don't have that, right? So there you go. It's an awesome product, amazing rates. It's just something I think is amazing for our veterans, those that served just like myself. The FHA, you don't have to be a veteran. You can be anybody, as long as you have a minimum 580 FICO score. 3.5% down, right? Remember we talked about the conventional loan, you could put 3% down. Well, FHA, you could put 3.5% down, right? And you could imagine also here in a high marketplace, 500,000, 10% is 50,000, 2.5% would be 25K. So you're looking about closer to 30,000. Still a lot of money, but it is an option. But then again, in my places like Alabama, where $100,000 home, 10% is 10 grand, 3.5% would be 3,500 bucks. A little bit more palatable and easier, right? And then of course USDA. Again, that was another 100% option, but it's income restricted, meaning based off of the county that you live in, the zip code that you're trying to purchase the home, you can't make too much money. Otherwise, everybody would use that type of loan product. It's meant for those that don't quite make a whole lot of money to where they could afford a traditional 3% down payment, but they still make enough to where they can afford housing. And that's why it's more of your rural areas, right? Not a whole lot of USDA loans done here in Hawaii. We do them, but on Oahu per se, you're limited to certain areas and the income restrictions, right? The Big Island, a little bit more region to work with, but still you got those income restrictions. So it is income restricted, where VA and FHA is not. The other type of loan is called the jumbo loan, right? A jumbo loan is basically any type of loan that is over your county conforming loan limit. And that's going to differ from county to county. Some counties in one state could be the standard conforming limit, which is $453,100, right? And then other counties, it could be higher. So like here in Oahu, Honolulu County, the conforming loan limit is $679,650, which is a lot, right? Where in Roseburg, Oregon, which is where I graduated high school from, the conforming loan limit is only $453,100. So it is county specific based off of zip code. So anything over those conforming limits is then considered either a high balance or jumbo loan. What does that mean to you? Well, a conforming loan is considered not less risky. It's just not as risky as a jumbo loan. Jumbo loan's more money, right? It's not like buying a car. You buy a car, you can get away with putting $2,000 down. If you don't make your payments, they repo your car. When it comes to a house, though, if you don't make your payments, it's a pretty long, litigious process, and there's a lot of risk involved. You could burn the house down. Not saying that you would, but there are things that could happen that could ruin the actual property and the value that's associated with that if you do happen to default on your loan. So that's the quick, 7.5-minute video today talking about the different types of loans. And of course, there's also refinances as well. We can go into that in a little bit more videos later about the different types of refinances once you purchase a home and how you can leverage that equity to help get you some cash out, purchase different things, stuff of that nature. But that's a video for another time. So that's it for now. So gang, have a great day. Talk again soon. Aloha.